Okay, this has been well requested. Do you ever look at an options chain or options contract and not know which one to buy? Well, I have been requested to create a options trading beginners sort of guide. I'm going to tell you right now, this is not an expert guide to options trading. However, this is not also a beginner's guide. I find those videos very boring, going over the options Greek, the delta, theta, gamma, vega. I'm going to actually talk about which ones we need to know about, which ones we need to refer to, and how I actually take trades. And before you click off the video or before you question the video, this is just from this week in Discord: a 38% gain on SPY, a 110% gain on Nvidia puts, 102% gain SPY puts, 45% Nvidia puts, SPY puts 58%, Tesla puts 88%, SPY calls 61%, SPY calls 63%, so on and so forth. The list goes on. And yes, that only was about 3 to 4 stocks or whatever I listed in there, and that is because that is only the past week. I'm not saying we don't lose. However, you need to know how to lose, and that's very important when you trade options. I keep this very short, sweet, simple, to the point. Another thing I wanted to note, after hours tonight, the night I'm making this video, AMD had earnings. We played calls on this. The thing is up over 8% after hours. TA matters. Now, this was a YOLO play. It could have went either way, but what I want to get out is that technical analysis matters in these scenarios. And that's going to bring us into our first example, the SPY. I'm going to kind of show you, let's say I thought the SPY was going to a certain level, what contract would I buy and why? And I'm going to give you kind of an example on that. I also wanted to take a random ticker here. So we have UNH, United Health Group Incorporated. Let's assume you guys are very, very brand new. I'm going to try and actually make you good in this video, after this video. And it should be simple, right? It shouldn't be too much to wrap your head around. These options courses where they're telling you all of these things, breaking down your brain, and then you wake up the next morning and forget 95% of it, are not helping you. I'm going to tell you what you need. First of all, if you do not know how to chart or use technical analysis, I'm going to give you a tool for you. This is not the save everything tool, but it will help you starting out. Fib retracement. This tool is very important because if you don't know how to map out support and resistance lines, this will sort of give you a guide on starting or how to do so, or give you an idea. So what you're going to do is you're going to use this, and don't worry, for the people watching that do know how to do technical analysis, it's going to take 1 second. You're going to find a ticker, a stock ticker, and you're going to grab it from the recent high to the recent low. So you saw this channel right here, grab it from the recent high relatively to the recent low, right? All relative, right? You don't want to count these wicks too much when you're dropping a fib retracement or dropping support and resistance levels. And voila, what happened? It broke above the 1 on the fib. You got a base here, and now it's going higher. If you get an increase in volume on this move higher, chances are you got a good shot at coming up to the next fib level, the 1618, at around $610. Now, that was just one example. Let's take a look at the S&P 500. I have some trend lines and TA done on the S&P 500. Let's assume I thought it was going to reject off of this level at 543 and come down into this range at about 538 or lower. Well, let's take a look at the options chain. So what I normally like to do is never go for 0-day expiration. So we're just going to get out of that. The Friday's close. Today's only a Tuesday. I'd look at the Friday's close, which is a 3-day expiration. Now, why am I doing this? This is because of theta. You can see right here at the end of the contract, this is one of the most important things that you want to pay attention to. Don't pay attention to the number too much on theta. Just know that if you have expiration a day later, 2 days later, chances are you need that move to happen in the next hour or two. Sort of the same thing. If you expect a stock to do something in a week, you want to grab expiration about a month out, right? You want to be saved from theta so that it does not decay your contract completely. Okay, so now we got that out of the way. You're looking at the 3-day. You look at the contracts. You want to look at the volume. Okay, so I'm looking around for the SPY to come to about 538, right, or lower. That's essentially my target. I'm pretty confident it's going to come to that and potentially come lower. So I would look at the 538s or around it, see where there's lots of volume. I see lots of volume in the 540 strike. You can see right here 20,000 in volume on that strike price. Now, implied volatility is also around 24%, pretty low for all of these contracts. That's a good thing to see. You want low implied volatility. Another thing is, if implied volatility is in the hundreds of percentages, be very, very careful trading these stocks. That means you are overpaying for these contracts, and you're going to need an insane move. Likely you're looking at a squeeze play or earnings play or something along the lines of a big catalyst coming up. Okay, so we're looking at this. We see something with high volume, high open interest, okay? Then we want to look at the delta. The delta is a little bit higher than some other contracts. Now, if you look here, higher deltas may be better for riskier, more speculative strategies, while lower deltas may be better for lower risk strategies with higher win rates. And clearly, what we're looking at right now is we want a little bit of risk. Obviously, you're trading same week. That's a pretty risky trade here. But we also want to make a lot on the contract, okay? So put it this way, right? There's someone on the other side of the contract when you're purchasing. You don't want to per se bet that the stock's gonna be under 542, right? Because it's at let's say 542.60, right? If you bet it's at 542, then the other person would be like, well, dude, you know, it could possibly be under 542, like it's pretty close to that level. I'm going to upcharge you for this contract, or you're not going to make as much if you win the bet, right? Just make it simple like that. So if you say, hey, you know what? Fine, I bet you it's going to be under 538, right? They're going to be like, damn, no way. I got you with a higher payout, so on and so forth. Just look at it very simply, guys. So these are the main things I look at. I would grab the 540, 3-day out. And here's also what I would do, okay? Like I said, TA matters. So if I were to look at this chart, I see top of the channel right here. I see a rejection right here, and then two more on the candlesticks. I'd probably set a stop above these rejection candles around 544.70. Or if you want to play real risk on, you'd probably set a stop up here around 546.80, which is out of this descending resistance level that this is trading in, right? Descending resistance channel that is trading in. Another website you can use, Market Chameleon, if you want to check out some different things about stocks. You can also check out Visual Sectors, some other sites like that. I'm going to tell you right now, if you want to become a better options trader, get in the Discord. For one, I post my trades as soon as I take them in there. I don't give financial advice. I'm not a financial advisor, but you can choose to take my trades into account and then do your own technical analysis to see maybe, hey, my thesis matches up with his, and that can help you execute potentially. Or you can join to talk with everybody, stocks and crypto, because they're all trying to do the same thing, like yourself, like me, become financially free, and let's do it together. I don't want to make a BS video, at least right now, that covers a ton of things that you can't wrap your head around. If you're brand new, get your technical analysis down, set your stop losses, and know which contract to grab. Now, another addition, where would you per se hold on till? Well, you have the bottom of this channel right here that you could hold on to for support, or you'd look back for recent support, right? The stock, you know, recently held up right around here. You can see the top of these wicks. Maybe I'll let it go right here at 535.75. Okay, so you get this gain, you get this big gain from here. Or you say, hey, well, it closed the candle completely under this wick, 537.41, so I'm going to ride it down. Maybe it goes a little bit lower than this, touch the bottom of the channel. Overall, you evaluate. You can have a trailing stop. You can bring it down. Overall, pretty simple. Also, if you don't know technical analysis, voila, what will help you is my custom indicator that basically gives you patterns, layouts for you. It's the top link under the video, and you can get a free trial right now, 14-day free trial, because I think you guys will like it. Also, the second link under the video is for Moomoo, where you can go chart on and trade in there. And once you open an account through my link and make a deposit, they're giving you up to 20 free stocks, as well as allowing you to earn 8.1% APY on your uninvested cash. Also, level 2 order book data for free, in which you can see where people are loading up and dropping off shares of any given stock, access to trading options going long and shorting as a retail trader, which a lot of brokers don't give you access to. Overall, all of these links are right in the description of the video. They are the top 3. Leave a message in the comments down below if you guys are just getting into trading or what you think of this. That is it. I love you. Lottery Socks out.